Welcome to The Explainer. Today, we're diving into a genuinely baffling global trend. Why are so many young people seemingly gambling away their financial futures? We are looking at a massive shift in how millennials and Gen Z view money, risk, and basically their entire place in the economy. So let's dive right into this. To really wrap our heads around the sheer scale of this YOLO, you only live once spending spree, just look at this number. By 2025, digital microtransactions in India alone are projected to hit a mind-blowing 300 lakh crore rupees. Literally 300 trillion rupees. Just picture this for a second. It's midnight, you're totally exhausted after a long day at your entry-level IT job. You know you should be saving for a house, sure, but you realize that goal is, well, decades away. So what do? You order a 400 rupee rate night dessert on Zomato. Because your brain just tells you, man, what is the point of saving anyway? That exact feeling right there, that's exactly what we're decoding today. Here's our roadmap for today. We are going to start with the YOLO economy, then define financial nihilism, look at a game that feels rigged, explore social media and hyperreality, face the reality of the casino, and finally, look at the antidote to this despair. Section 1. Welcome to the YOLO economy, from savings to speculation. Okay, so here's the central mystery we need to solve. Why is an entire generation gambling their savings? Historically, the playbook was pretty simple, right? You get a job, save diligently, put your money in a diversified retirement account or some mutual funds, and then you just wait 40 years. But today, an entire generation is throwing that old playbook completely out the window and opting for super high-risk bets instead. But why? Well, we can see the symptoms of this shift absolutely everywhere. Forget your grandfather's diversified 401k. Today's portfolios, they look more like a dizzying handful of lottery tickets. We've got retail investors piling into meme stocks like GameStop purely to drive the price up. We're seeing massive concentrations of net worth parked in wildly volatile cryptocurrencies and altcoins. We see everyday retail traders absolutely dominating zero DTE, that's 0 days to expiration options, which is basically financial day trading on steroids. And on top of all that, we're seeing a massive explosion in sports betting, particularly these really complex parlays and prop bets. In fact, we've seen a staggering 200% increase in online gambling spending in just a few short years. And tech has essentially poured gasoline on this fire. Thanks to heavily gamified apps, practically everyone now has a 24/7 casino sitting right in their pocket. You can make high-stakes bets while you're literally just waiting for the bus. It's completely normalized a behavior that not too long ago was considered deeply risky. Section 2. Defining financial nihilism. A crisis of belief. So the term financial nihilism was actually coined by financial podcaster Dmitry Kofinis, and it perfectly diagnoses the root cause of all these wild symptoms. It's this postmodern philosophy that basically treats the objects being traded, like those meme stocks or certain crypto tokens, as fundamentally worthless. See, people aren't buying them because of strong cash flows or solid business fundamentals. No, they're buying them because they have completely lost faith in the traditional economic system. It's that creeping, heavy feeling that if playing by the rules doesn't get you anywhere, well, why play by the rules at all? And this sentiment is captured just beautifully by a Reddit user who wrote, "This isn't just about getting rich quick. It's about this desperate search for any shot, no matter how small, in a system that feels completely stacked against you." It's absolutely crucial to understand that this isn't just pure speculative greed. It's driven by anger, it's driven by exhaustion, and really a desperate need for a way out. Section 3. A game that feels rigged. The math behind the hopelessness. Now, what's really interesting about this slide is the sheer mathematical wall young people are hitting in the US housing market today. Just look at this. For boomers and Gen X, a starter home costs roughly 4.5 times their annual salary. But for Gen Z, it's 7.5 times. The generational goalposts haven't just been moved, guys. They have been placed on an entirely different planet. And, this isn't just a Western phenomenon. Let's look at the exact same mathematical hurdle over in India. Back in 2012, a starting IT salary was around 3.5 lakh, and a modest starter home in a Mumbai suburb was, say, 30 to 35 lakh. Fast forward to 2024, that starting salary, it's barely budged, sitting right around 4 to 4.5 lakh. But that exact same house is now 75 to 90 lakh. Wage stagnation combined with massive asset inflation is pretty much a perfect recipe for destroying financial hope. Even traditional stock market investing feels increasingly out of reach these days. Back in the 1980s, an average median income could buy 219 shares of the S&P 500 at its peak. Today, that exact same median income can only buy 18 shares. That is a massive drop. The purchasing power of a normal wage earner has just drastically diminished, making standard wealth accumulation feel incredibly slow, if not totally impossible. Section 4. Social media and hyper-reality, the illusion of wealth. Have you ever heard of the French philosopher Jean Baudrillard? He coined this term called hyper-reality. It's basically a state where we can no longer distinguish between actual reality and just mere representations of reality. Think of like Instagram food that looks absolutely incredible in a perfectly lit photo but tastes terrible in real life. Or influencers renting fake private jet sets just to snap a selfie. We are literally living in a digital simulation where the narrative of wealth has completely replaced the boring fundamentals of actually building it. Social media has fundamentally warped our expectations. I mean, in the past, the financial pressure was all about keeping up with the Joneses, comparing yourself to your actual neighbors who had similar jobs and incomes. But today, it's keeping up with the Kardashians. A 22-year-old opens their phone and immediately compares their entry-level life to a 14-year-old crypto millionaire or some influencer buying a neon Lamborghini. It's this absurd, completely unrealistic benchmark that makes normal, steady progress feel like total failure. Section 5. The reality of the casino. Does the YOLO strategy actually work? So, from the perspective of a financial nihilist, the logic here is actually, tragically rational. If the finish line of buying a home is $1 million away, a steady 5% return feels completely useless. The rationalization is basically, look, I have a 0% chance of reaching my goals via slow saving versus a greater than 0 chance if I make a massive, high-risk YOLO bet on an altcoin. But, and this brilliantly illustrates the actual outcome, the cold hard truth is that this speculative gamble is a negative-sum game. The data shows that since the meme stock craze peaked, the average retail trader actively trading these highly volatile assets has made exactly a 0% return. Yep, 0. Meanwhile, a simple S&P 500 index fund has just quietly continued to offer steady, positive compounding growth. Turns out, when you treat the market entirely like a casino, the house almost always wins. Section 6. The antidote to despair, building financial survivability. So, how do we survive this economic environment without losing our minds or our money? Well, it requires returning to pragmatic, data-backed steps. First, build robust cash reserves so you aren't forced into making bad decisions when emergencies hit. Second, utilize those tax-advantaged retirement accounts like a Roth IRA early on. Third, put the bulk of your money into low-cost index funds. And fourth, look, if you absolutely must speculate, keep it to a tiny, tiny fraction of your portfolio. The real goal here isn't instant wealth. It's staying in the game long enough for compounding to actually work its magic. But here's the thing. Those financial tactics, they only work if you have solid mental defense tactics to back them up. You absolutely have to stop comparing yourself to digital illusions and social media influencers. Avoid taking on early, heavy debt burdens or unnecessary EMIs in your 20s. Don't build a financial cage for yourself right out of the gate. But also, practice 30% guilt-free spending to enjoy the present so you don't feel entirely deprived. And importantly, view standard investing like setting up a small monthly SIP not as a way to get rich tomorrow, but as building discipline. It's about reclaiming your mental peace and building a life-saving habit for when your income eventually grows. Wow, okay, we have covered a lot of ground today in this explainer, from the dizzying heights of meme stocks to the frankly crushing realities of the housing market. Financial nihilism is clearly a symptom of a much, much deeper economic reality. So what does this all mean? Well, the final question you really have to ask yourself is this. While we must absolutely manage our own financial discipline, is this trend actually a massive vote of no confidence? Does individual behavior need to change, or does the system itself need a fundamental rewrite?